gold is going and how to get or how to take advantage of these opportunities. So the monthly candle, we are in a new month actually. So the monthly candle closed on Thursday. So right now we are in a new month. We don't know whether this new month is going to pop up or pump down. So we'd have to be careful with our analysis. Now, new month comes with new opportunities, and would have to give respect to how the previous month closed and the other month. And doing top-down analysis from the higher time frame, even on the monthly time frame, you can see that gold has been buying for a very long time. It's only this year that gold has decided to pause the buys. But even with that, it's risky because normally when there's war, for example, um, the Iran US Israel war, normally when there's war, gold is supposed to be pumping up. But this time around, gold is not doing that. Gold is doing the opposite. And the dollar is also doing the opposite. So I'll be analyzing the dollar as well because you have to know what is happening on the dollar. Because gold, you are trading gold against the US dollar. So gold, what in one way or the other, what happens to the dollar affects gold in one way or the other. They kind of have a correlation. At first, that's how we used to trade. If gold is buying, it means the DXY is going to be selling. If DXY is selling, it's going to be buying. But these days, it's a bit tricky. But you still need to know what DXY is doing. And with that, it can give you a clue of what gold is about to do. Yeah, I'm not saying they are directly correlated, but you really have to know what the dollar is doing because definitely we are trading gold against the US dollar. I hope this makes sense. Yeah, so let's dive into the charts with gold. For the previous month, you can see that it has been buying, buying, buying. It's just we are in the fifth month right now, so it's just these months one, two, and we are in the third month that has been selling. So we are in May. So April was selling, February was also selling. So from January down to till last year, we're still buying. We're in a buy market till February. Then February decided, no, I'm not gonna buy anymore. I'm gonna start selling. Now, this is the February candle. This is the April. All right, so this is the March, April, and this is the May candle. This is forming now. So this is the May candle. This is April. This is March. And this is February. All right, so February, that is when the buy stopped. And March, there was a sell-off. So at least we have an idea of what happened on a monthly. Let's see if we will find something on maybe 3 months. Actually, there's no information on a 3 months time frame. So let's go back to the monthly. So yeah, so the monthly, at least we know what happened on the monthly. That gold started selling off in March. So the March there was a bearish engulfing candle. So the March candle engulfed the February candle. So engulfing it means the sellers sitting here taking profits. People are taking profit here, and they are willing to sell to the downside. Now this is March. Now this, let me zoom in. All right, so this being March, this is March, this is April. So this will happen April. April gave a candle. It's not really decisive. It doesn't know if it should keep pushing down or it should be going up. Then May. So now we are in May. So May, we don't know what May is going to do. But this May candle, anything that's going to happen on this monthly candle, these candles, the lower time frame candles, which is we are on a monthly right now. So anything that is how this monthly candle is going to form, which is this current month, May, is going to form, is going to depend on the weekly, the daily, 4 hour, and 1 hour. It's going to depend on what we see on these time frames, the weekly, the daily, the 4 hour, and the 1 hour. So, like I said, we know what happened on the monthly right now. So now we have to dive down to the weekly time frame to see what the past weeks have done. And now last week, what did we see? This is how last week closed. Okay. So if last week closed like this, meaning we are still bearish. Last week was selling off. There was this buy push to the upside, and last 2 weeks, this candle formed the last 2 weeks. Then this one formed last week. So we don't know whether this week is going to sell off or is going to buy. Now, our decision is not made on the weekly time frame. The weekly time frame is also telling us the direction in which we are going. So weekly, monthly, and daily sometimes these time frames will tell you the direction in which we are going. Now, the decision and the real analysis is going to be on a 4 hour and a 1 hour because we are day traders. Day traders catch the moves during the day. Sometimes you swing it for days. And if you get a very good swing trade for weeks, you can swing it. But these higher time frames are just telling us where the market is and what could happen in the coming year, coming months, in the coming weeks, in the coming days. So that at least we know what happened on the monthly. That's on a monthly time frame, we are aware that sellers are in control right now. And from any point in time, they can break below any level. Now, on a weekly time frame, it's also speaking the same language that all the subsequent weeks, there were buyers at this level that pushed price all the way to this upside, but they weren't able to push price to the previous high, and sellers took advantage. Sellers took over here. So we can outline this level as a key level here. This could be a key level. Swing, it will be a swing level because it's on a higher time frame. If we go on a lower time frame, we are going to notice it's correlating with maybe a daily support or a daily resistance. But for now, we can see that price on a weekly time frame, price dropped all the way downside. Now, the bulls came back into the market, but they couldn't break above this level. 4834. We couldn't break above this level. Then sellers took over again and they're pushing price down. Now, this is what the weekly time frame is telling us. So it's like it's telling a story. Now, on a daily time frame, exactly like I said, you see with this line we drew on the weekly, you see it has correlated with something on a daily. It has correlated with this level. And this is a strong level on a daily time frame. This we can call a support. Now, it's not so clear. So this is what we are going to do. We are going to call it a zone. So it means there are a lot of sellers sitting here. Okay. So this is how we are going to look at it. This is how we are going to look at it. On a daily time frame, there's a lot of sellers sitting here looking at pushing price down. So anytime price gets back to this level, these same sellers that are here would want to push price down. Why? Because the sellers pushed price all the way, broke this level to the downside. Now buyers took over from this level, took it all the way here, but couldn't break this level. So now this zone has become a very key zone on the daily time frame and even on the weekly time frame because we have this level here on the weekly time frame. Now they couldn't break to the upside and they took over again to the downside. So this is what we are looking at. So on a weekly, this is a key zone. On a daily, it's a key zone. So we will go on the 4 hour as well. Now, coming on the 4 hour, that is where things become very critical. Things become very technical. You really have to open your eyes, see whether structure is bullish or bearish. Has structure shifted from bullish trend to a bearish trend? These are very important on the 4 hour. So for now, we have a key level which is this zone, and another key level which is here. Another key level which is here. Which is here. But the closest key level is this. The closest key level is this. Now, this is a bit far from here. So we wouldn't say that, okay, I'm going to wait for the market to come all the way here till I sell. But now we are going to take our decisions on a 4 hour and a 1 hour based on what we are seeing. So at least we have this key level here. Now, also have this key level here with outline. Now we go on a 4 hour. Now, 4 hour is speaking a lot of languages, okay? Now, 4 hour, that is where you have to open your eye, know whether it's because with the structure, like I said, we look at structure on 1 hour and a 4 hour. So 4 hour, you have to know whether structure has shifted from bearish to bullish or from bullish to bearish. Now, in a bullish trend, this I keep explaining it over and over again, and I'm going to go over it again. In a bullish trend is made up of higher highs and higher lows. The bearish trend is made up of lower lows and lower highs. Now, how do you know? Because people keep saying higher highs, higher lows, and lower highs. Now, in a bullish trend, we see higher high, higher low, higher high, and a higher low, a higher high, and a higher low. This is a bullish trend. So a bullish trend is made up of higher highs and higher lows. So anything, anywhere, or any time frame you see higher highs and higher lows, you know that that particular time frame we are bullish. Now, a bearish trend is made up of lower lows and lower highs. A bearish trend is made up of lower lows, lower highs, lower lows and lower highs, lower lows and lower highs, lower lows. So any time frame I'm sitting or I'm standing and I see something like lower lows and lower highs, I know on this particular time frame I'm bearish, and on this particular time frame I'm bullish. Now, this time frame is going to be this bullish time frame is going to switch to bearish time frame when I notice that it is not giving me higher highs and higher lows again. It breaks my last low, retrace, and start selling. And in this case, this is my last, this is higher high, higher low, higher high, higher low. This is my last higher low. So once I notice this, my higher low is broken. So this is what broke this higher low. So once I notice this, my higher low is broken, I'll just have to wait for retracement and sell to the downside, depending on the time frame I'm standing. Same thing here. If I'm in a bearish trend, it will keep selling. A bearish trend will keep selling till I notice that it doesn't want to go down again. Then my last, this is lower low, lower high, and my last lower high being broken. So once the lower high is broken, I'll wait for a retracement to the upside. So this is the last lower high. This is the last higher low. These two things are very important. Where is it? All right. So in a bullish trend, this is a bullish trend. This is a buy trend. Okay. I'll be fast with this. This is a buy trend. How do I know this buy trend has stopped? When my last higher low is broken, and this is what broke this higher low. So once it broke this higher low, this, let me change the color. This. So yeah. So this is what broke this higher low. So this is higher high, higher low, higher high, higher low, clean bullish trend. We are still in a bullish trend. But when I notice that my higher low, my last higher low has been broken, which is broken by this one. Once it's broken, I'll be thinking, okay, this buy trend is over, and I'll be looking for a sell trend. So I'll be waiting for a retracement to the downside. Same thing here. This we are in a downtrend. Okay, we are in a downtrend here. Now, immediately I notice that this is a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So immediately I notice that my lower high, my last lower high is broken. Because if you notice, this lower high is respecting this lower high. This lower high also respects this lower high. This same lower high respect this same lower high. This also respected this. So we are still bearish. But this, look at what happened here. This never respected this. If this was created like this, I would say it is still bearish because it is respecting this, it's respecting this. But what happened? This broke above this. It didn't respect this. So once this last lower high gets broken, I'm like, okay, probably we want to start buying. So I'll start looking for what? Retracement and buy to the upside. It's simple. You have to put this at the back of your head. It's as simple as that. Now, the rest is experience and how you see the markets, key levels, and all that. This is the basic of trading, and the rest is experience. The rest is open your eye well. The rest is controlling your emotions, risk management, because it's not possible to always be right in the market. No, nobody is ever right 100%. That is why we use stop loss. That's why we use risk management. Yeah, so let's get into the market now. On a 4-hour time frame, if you can see clearly, On a daily, let's look at daily. What is daily doing? Daily, or let me see weekly. I don't have any information on weekly. But if you see clearly here, daily is selling. Why is daily selling? Because daily is giving me lower lows and lower high. You can see this is a resistance. Okay, where am I? This is a resistance created. This is a resistance. This is a resistance as well. There's a resistance as well. So you see, there's a resistance on the daily, resistance. Now the resistance keeps from that's on a daily. So on a daily time frame, it's still bearish. Now if you go on a 4 hour, the 4 hour will be saying something else. Now 4 hour, if you go on a 4 hour, you can see that 4 hour also created resistances here. So they are. So every time frame and what they are is telling you. So you have to know time frame correlation to make your decision. Let me use the line instead of zone. So on a 4 hour, there's a resistance. On the 4 hour, there's a resistance. There's also another resistance. There's also another resistance. What do you notice here? Now you notice that looking at the 4 hour, where is it? Looking at the 4 hour, you can see lower lows, lower high, lower low, lower high. No matter what happens, it respects the previous lower high. No matter what happens, it doesn't break above it. It respects it. No matter what happens, it keeps respecting it. Okay? From here. No matter what happens, it keeps respecting it. Because this lower high it has respected this lower high. This has respected this. This tried to break this, but it respected it. It never broke it. This also is respecting this. So it clearly tells us what? That we are in a bearish trend. Now, something interesting happened here. Okay. This was a lower high before this happened. Before this happened. Before this happened. Before this happened. By that time, this had not happened yet. Before this happened, it was coming like this. So this definitely respected this. Doesn't make sense. So this would have been a lower high. Let me put as a resistance. When this was forming, it was a lower high that respected this. So immediately it broke. Someone will be looking for what? Buy opportunities from here, saying that we are going to buy to the upside. But look at something interesting that happened. This one, when so even if you caught a buy here, even if you caught your buy here, you would have caught it clearly beautiful. But you see this there was a resistance here, there was a key level here that price refused to break above. So immediately refused to break above, you'd have to be careful. Now I see the same thing happening here. I see exactly the same thing happening here. What happened here? You see what happened here? This lower high here has been broken here. This broke this lower high. So somebody would be catching this buy here. Like I said, when the lower high is broken, this lower high is broken. I don't know if it makes sense. If you're following, it should make sense. I don't know how to explain this again. So we're in a bearish trend here. Lower low, lower high, lower low. Then it normally is supposed to do this. Okay, this is the normal movement it's supposed to give. But what happened? It said no, it's not going to give this. I'm changing my mind. I want to confuse a lot of people because trading is not that easy. So it gave a lower high, came here, buyers buyers came into the market, then broke this lower high. So once it breaks this lower high, you're like, okay, probably we are bullish. So that is how come I caught the buy. Last week I caught a buy on Friday. I'm going to explain to you how I caught the buy. So now it broke this lower high. Now if you break this lower high, what I'll be expecting from what I explained earlier on, that you wait for a retracement for a buy to the upside. Okay. You wait for a retracement for a buy to the upside. Now, that is how come I caught this buy on Friday. Now, catching this buy today, look at something interesting happening here. Just this exact thing that happened here. Look, I circled it here. Circle this here. I circle this here, right? This lower high was broken, so immediately breaks. You catch the buy from here to the upside. But catching it here, you have to know where to take your profit because it's a bit tricky because we are still on a higher time frame. We are still in a selling market. Now, it's the same thing that happened here. It's the same thing that is happening. Sure, sorry. It's the same thing that is happening here. If you look at it carefully, this got broken. So if you caught the buy here, you would have taken your profit here. Now, same thing. So here, when market opens, I'm looking at selling all the way to this key level. When market opens, I'm looking at a sell all the way from this key level. Now, looking at a sell, I'm not just going to take a sell. I'm going to look for a lot of confluences to tell me, okay, this is what I'm looking for. So when the market opens, this is what I'm looking for. When the market opens, I'm looking at, you see how this daily candle closed? I'm looking at this candle wick filling. When I say wick fill, I'm looking at this wick to fill to the downside before if there's going to be any push to the upside, we are going to push up. That is going to be for tomorrow or during the week, depending on what we are going to see. But for me personally, I see a sell to this key level. I see how many pips? I see a sell because I have a resistance here. I have a resistance here. Okay. I have a resistance here. So having a wick fill criteria on my daily time frame, I know this is a key level. Okay. So knowing this is a key level, what I'll be expecting is I'll be expecting this candlestick, the daily candlestick after this to wick fill to the downside. Now wick fill means I want to see price come to the downside. Now I'm going to do that on the lower time frame, which is 4 hour. Now 4 hour, I can see a resistance here. Now basics of trading, you sell at a resistance and you buy at a support. Now, you don't just wake up and start selling at a resistance. You have to look for confirmation. Confirmation is always on 15 minutes and 1 hour. So this is what I'm looking at. Probably because this is what gold likes doing. So probably when market opens, it's going to take all these people out. So after taking them out, I'll be looking at selling here to this level. So this is a setup I'm seeing for tomorrow. So I'm looking at two things. If I get those conditions, I'm going to sell. So this is a free trading setup I'm giving you guys. Okay? This is a trade. This is a trade idea I'm giving you guys. Now, the confirmation, you have to wait for price to sweep all these people out. You have to wait for price to clear these people out first. So price has to come back, take all these people out, then come back to this zone. So this is my sell zone. So when it takes them out and it comes back to this zone, I'll be selling all the way to this downside. How many pips? How many pips? That's 970 pips. Come on, that's a lot of money. And I will be willing to risk if I'm catching 970 pips, I'll be willing to risk how many pips? 216 pips. 216 pips. So these are the two conditions. These are my confirmation. I want to see price sweep these people first. Come and sweep these people out. Take these people out. Come back to this zone. Now, when it comes back to this zone, when I see a confirmation that's a bearish engulfing candle, I'm going to sell all the way here. So these are my conditions for taking this sell. Now, if it doesn't do that, imagine price opens, like imagine the market opens and it drops boom, to the downside. Okay, I'm not going to take that trade because I'm not going to take my trade here. Neither am I going to take here or here. I want to start selling here. Now, before I sell, I want to see price take all these people first. Come back to this zone. Give me confirmation and I'll sell to this downside. Free game. There's a free setup. So there's a free setup I'm sending. Yeah. So this is what I'm looking at doing if price reacts exactly the way I want it to react. This is the setup I'm taking. And looking at BTC, BTC too, I'm looking at a very beautiful setup. I'm waiting for the weekly candle to close. Now, I want this weekly time frame to close bearish. Green, sorry, I want it to close red. If it closes green, I'm not going to take the trade. You see how this candle is closing? This weekly is going to close in 5 hours time. So in 5 hours time, I'm going to decide whether I should take the trade or not. I'm going to wait for this candle. If it closes green, I'm not going to take it. But if it closes red like this, I'm also going to be expecting a wick fill. No, note with the wick fill, it's not my trading strategy. Okay, my trading strategy is market structure, read market structure, price action. I would say my trading strategy is price action. But now the wick fill strategy is also part of price action. You have to know how the candle forms and how it's going to be moving in which direction. So if it closes red, I'm going to be looking for sales. Now sales, I'm going to be looking for sales below this key level. I've already drawn the key level here. I'm going to be looking for sales. I also have a trend line here. So the setup is not yet ready. I want the weekly candle to close first. Then I'll know what to do. So yeah, that's it. If it closes green, I'll see what price wants to do and see where it's gonna take me. So that's it for BTC and gold. So gold, like I said, when market opens, I'm expecting to sell to the downside. That is if it meets my conditions. Now, on DXY is also very interesting. The DXY was pumping up the whole time, but the whole of last week it decided to drop. So now DXY is also very bearish right now because I had a trend line here that was buying, buying, buying. Then all of a sudden it pumped down. Now, this is a key level, 99.140 is a key level that is holding DXY. So anything below this level is a sell. Now, if you go on a 4 hour, because with DXY, you don't really have to spend much time on DXY. You just have to know the direction it's going. Now, if you go on a 4 hour, you can see that this is a key level that is resisting. So anything below this level, I'm looking for. I'm looking at DXY dropping. Anything below this level, I'm looking at DXY dropping. And anything above it, I'm looking at DXY going to the upside. So with DXY, I'm just looking at the direction it's going, and the direction is going to tell me how to think or how to analyze gold. So it's as simple as that. So I'm not going to make the video long. I think we've spent enough time. And that's it. So stay active in the group. I'm definitely going to say I think I've already sent this gold analysis. It's a free setup. So if it meets my criteria, I'm going to send a signal directly that I'm selling or I'm buying. Yeah. Like I said, I trade gold and BTC and deriv on weekends. I think this weekend I didn't trade. I didn't take any trades on deriv because I was a bit busy. Yeah. So stay connected and stay motivated and stay disciplined. Peace out.